Did he just say I'm supposed to save 12.5% of my gross income? Are you freaking kidding me?
Yes, that's what I'm thinking. Because I'm like, I'm living paycheck to paycheck.
I'm living paycheck to paycheck.
And I feel trapped and I can't do the things I want to do. So why would I take 12% that I don't have?
The whole reason you want to pay yourself first,
yes,
is so you don't pay taxes. So what the government did decades ago, over 40 years ago, was create tax laws that made these 401k plans deductible. And this is why it's called pay yourself first. That means when you put money in a retirement account, it avoids paying taxes. You skip the IRS, okay, legally.
Okay, so if let's just say I make $100 in a day, I'm going to take $12 and put it in the 401k. What you're basically saying is under the law, the $12 comes out of the 100.
Not taxed.
Not taxed. Versus what happens where if you don't take it out, the whole 100 is taxed.
Now, it grows tax-free. And it grows tax-free until you take it out at retirement. If my kids save an hour a day of their income from the moment they get their first job, they'll never have to worry about money again. That's how simple it is. Because 1 hour a day of your income buys your financial freedom. Now, as of this month, 565,000 people who are millionaires inside their 401k plans. Those millionaires have, on average, $1.4 million in their retirement account. It took an average of 26 years, and the average person who has $1.4 million inside these Fidelity 401k plans is age 59, and they saved 14% of their gross income, a little over 1 hour. So if you put 14% away, and then the employer, which most employers match on top of that,
yep,
that's what these people did that became 401k millionaires. They became automatic millionaires in 26 years. Okay, they're ordinary people who simply spent less than they made. They spent 90 cents out of every dollar, and they spent 86 cents out of every dollar.
So one takeaway for sure, if you work for a company where there's a 401k, pull it out, make sure you're taking out at least 12%, and make sure you know it's actually invested in something. Yes.
Okay, so I am willing to bet my life on it that your Fidelity plan has what's called a target dated mutual fund in it. So in the bulk of 401k plans, you have a target dated mutual fund. And what that does is that is an asset allocation fund that is professionally managed between stocks and bonds. And it is created to be rebalanced towards your age of retirement.
So higher risk when you're younger and more conservative when you're older?
Exactly. That is my recommendation for 99% of people who have 401k plans. You don't need to think the returns have been just fine and then just leave it alone.